Hey guys, welcome back to Stacking Stocks as we figure out why Tesla stock isn't going up at the moment. What are the stumbling blocks? And will the giant EV maker be able to maintain its dominant status? Stay tuned and let's find out. While other EV makers are not profitable and still getting their bearings in the market, Tesla is a veteran. Its share price skyrocketed during the pandemic on the back of record deliveries and the Biden administration's decision to make electric vehicles a key piece of its climate change agenda. Investors eager to get in on EV action heaped money into Tesla's shares and helped the company surpass $1 trillion valuation. However, the stock has reversed its trajectory in 2022. Tesla's stock price has been down since the start of the year, even though the company reported record deliveries and analysts posted glowing letters of recommendation. For starters, Tesla is delaying more Model X orders as Elon Musk admits that Tesla made a mistake in shutting down production of the previous version as the production ramp of the new version is having problems. The automaker didn't produce the Model X for about 8 months as it refreshed both the Model S and Model X programs and focused on Model S production first. During those 8 months, the automaker kept taking orders for the new Model X, also known as Palladium, after the refreshed version was unveiled in January 2021. But Tesla already had a backlog of orders for the Model X before the refresh was unveiled. The result is many people who placed Model X orders over a year ago are still months away from getting their cars and often facing further delays. Now, a few months ago, Tesla was giving Model X buyers some more clarity with better delivery windows. However, many buyers are now reporting that Tesla has issued a new vague explanation of delays on many of these delivery windows. Several buyers who are a year into their Model X orders said that Tesla updated delivery windows into the second quarter of 2022. In a series of tweets, CEO Elon Musk admitted that Tesla is having issues with the Model X production ramp and that the automaker shouldn't have stopped production of the old version. And we believe that if this keeps up, many consumers as well as investors will be left frustrated. We all know that negative investor sentiment is never good for business. And the bad news has been piling up for a while now. Well, Tesla shares dropped more than 11% in trading after the company said it would not produce new model vehicles in 2022 and is not yet working on a hotly anticipated $25,000 electric car. This was contrary to what many people anticipated. CEO Elon Musk broke the news to shareholders on a 2021 fourth quarter earnings call, noting that Tesla is still dealing with chip shortages that are expected to linger throughout the year. The announcement dampened investors' hopes that this year would see Tesla begin to deliver on its sci-fi inspired metal pickup, the Cybertruck, which it unveiled in November 2019, and the Semi, a heavy-duty truck, which it announced in November 2017. The result of the earnings call was an unwarranted massive Tesla stock sell-off. While the EV market has received a legislative boost in recent times, it has yet to pick up steam to compete on an even footing with gasoline cars. For instance, electric vehicles comprised just 7% of the global market for automobiles during the first half of 2021. An interest rate hike by the Fed may have further turned off investors from Tesla because they reduce the value of future earnings that are discounted back to the present in modeling valuations. Now, there have been several claims of a looming Fed interest rate hike in 2022. What is this about and what should investors anticipate? So, Federal Reserve President James Bullard said he supports raising interest rates by a full percentage point by the start of July, including the first half-point hike since 2000 in response to the hottest inflation in 4 decades. And Goldman Sachs analysts said that they would consider changing their forecast if other participants join in, especially if the market continues to price high odds of a 50 basis points move in March. The shift by Goldman mirrors remarks by former U.S. Treasury Secretary Lawrence Summers, who said that investors should brace for the Fed to potentially raise interest rates at all 7 remaining policy meetings this year, and even for it to hike by more than a quarter point in one go. Global banks have been ramping up their expectations for an aggressive Fed hiking cycle. What this means is that if Tesla does not adequately prepare for the interest rate hike, then it's going to be a long year for investors. And that's not even the end of Tesla's 2022 woes. Well, the company is reportedly recalling 578,607 vehicles over a potential issue with the boombox feature. As per the document by the National Highway Traffic Safety Administration, some of boombox's features may result in vehicles not being compliant with pedestrian warning standards. The affected vehicles are equipped with external speakers that allow them to play varying sounds when they're in motion. Tesla's boombox feature is also played through the vehicle's external speakers. Well, this is certainly the last thing consumers and investors wanted to hear. It basically means that there will be more Tesla stock sell-off as investors' sentiments turn negative. Now, the big question is, should Tesla investors panic over all these issues? For long-term investors in Tesla stock, the current crash in its price may be a familiar script. The electric car maker's stock has always been a volatile play, and the current decline in its price, although severe, is not totally unforeseen. Analysts say that the car company will dominate the future EV industry. For example, longtime Tesla bull Morgan Stanley released a note stating that Tesla does not have any close challengers. The firm stated that car companies and investors might need to rethink their EV strategies in terms of volume per SKU as we continue to see Tesla's model rollout unfold. Their bullish thesis is centered on the company's fundamentals. During the pandemic, Tesla opened factories, devised workarounds to the chip shortage that affected the automobile industry, and reported record deliveries even as other car companies flailed amidst the pandemic's problems. During the January 26 earnings call, the Tesla CEO said the company plans this year to invest in research and development on a humanoid robot to work in the company's factories. According to Musk, this has the potential to be more significant than the vehicle business over time. And despite the decline in Tesla shares, many analysts remain bullish and focused on the company's lead position in the battery electric vehicle market, a growing and increasingly competitive industry segment. For instance, Deutsche Bank research analyst Emmanuel Rosner indicated that the bank continues to believe Tesla's impressive target trajectory for its battery technology, manufacturing capacity, and especially cost could help accelerate the world's shift to electric vehicles and extend Tesla's EV lead considerably. Now, Goldman Sachs' Mark Delaney reiterated a buy rating and a price target of $1,200, emphasizing its automotive margins had reached a reported 29.2% in the fourth quarter, and it expects sales to grow this year more than 50%. According to Delaney, Tesla continues to be one of the fastest growing companies in the automotive ecosystem. And on the full self-driving software, Goldman Sachs analysts indicated that the Tesla management reiterated its optimism around FSD deployments and views software as an important part of its future profit and value creation. While we remain guarded on how quickly the company can achieve full autonomy, given the delays the industry broadly has encountered historically on fully autonomous vehicles, Tesla remains well positioned to be a leader in autonomous vehicles in the long term, given the broad range of technology and resources that it's devoting to this area. So in a nutshell, many people still expect Tesla to be on top of the EV industry in 2022. What do you think about this? Well, let us know via the comments section. Thanks so much for tuning in to our session today. Remember to like, share, and subscribe. Stay safe, and we'll see you next time right here on Stacking Stocks.